I'm old. I guess we're both old enough to remember Jimmy Carter, very different type of president. What themes are you watching out for in 2025?
Well, in 2025, there's a lot of positive momentum, obviously, going into the year, and the expectations are reasonably high, especially coming off of an S&P that's been up over 20% for the last 2 years, and earnings expectations coming in the fourth quarter in double digits, and then expected to accelerate in the first half, and then especially the second half of next year. You also have sentiment at very high levels, valuations at high levels, a lot of inflows into the ETFs. And so a lot of this has been recognized. The expectations for the final price, I guess, of the S&P 500 at the end of the year, if you do surveys of the main strategists, kind of comes in at what the long-term average has been over the last couple of decades, about 10 percentage points. And the standard deviation of those estimates for that price are fairly narrow, especially compared to the last several years. So people aren't really wanting to go out on a limb, but given all of the policy uncertainty and the things that can happen, the range of outcomes is a lot wider than that would suggest. So we're looking for some volatility and feel like investors need to be on their toes.
What policies of the new administration will have the biggest effect on the stock market, do you think?
Well, we're all concerned about what's going to happen with tariffs because there's a wide range of what can happen there. And kind of a close second to that is what's happening with immigration and labor type of policy and what happens to deportations, et cetera. Both of those have the potential to be inflationary, but they also have the potential to not be as inflationary as sort of the high end might expect. You also have potential tax cuts, which would be very good for growth, but also might put some upward pressure on inflation. And that's what we've seen evidence in the 10-year yield, and then also in expectations for the Fed. But we don't really know where that's going to land throughout the year.
Do you think the inflation is a risk under Trump? Say he does restrict the supply of workers for American industry and farming, and if he does slap on big tariffs, could inflation come roaring back?
Well, I don't know about roaring back. I think that it's probably likely to be more subtle because those things will take time to take effect. Even once the policies are announced, certainly the immigration policy would have to be enforced. And, we would across multiple places in the United States and states. So that's going to take some while to figure out. The tariffs would be a bit more once they're announced and they're put in place, you can do the calculations to see what is likely to happen. But that still doesn't take into account that the companies and the industries that are affected are human beings who will alter their behavior in their best interest. So it's still not going to be, just a rote kind of effect. So we'll see it over time. And I think that's part of the danger is that you won't know until the inflation actually comes.
Yeah, that's the problem as well. What about U.S. corporate profits? What's the important thing to remember there?
Well, the consumer is very important in that, and so far the consumer is strong and has been stronger than a lot of people expected. Now, it's a question as to how much of that is driven by simply job security and savings that have been built up. Versus a wealth effect that is happening for those that have been involved in the market. Now, that's typically a smaller proportion of the population, but their spending power is outsized relative to their proportion. So as we go through the year and we see what happens with companies and their ability to take on projects and to hire folks and to keep them employed and to keep that flywheel going, how much room do we have with the wealth effect? And of course, that can go away just as quickly as it came if you have a downturn that's sustained in the markets.
You have some ideas for us, including Spotify technology, the giant in music.
Yeah, we like Spotify. We have liked it for a while. The stock had a very strong year last year, and so you can say, should the stock be taking a bit of a breather here, and will it take some time to catch up? But it's a very solid company. They have a third of the market share of the streaming business in music. They're 2 times their biggest competitors, which includes Apple and Amazon and YouTube. They have technology that the consumers like and the algorithms that they're ahead of to be able to capture discovery and consumption of music. The service itself on a value basis is underpriced relative to other types of entertainment. So there's room for price increases and there's room for margin increases. So there's a lot to like there, and that's why the valuation is on the high side. But we think as long as they can continue to meet those metrics, the stock will work.
The Royal Caribbean cruises, you think RCL, you think the rebound in the cruise industry is here to stay?
Well, there's really been a change. A lot of things, especially in that area, were left for dead or thought were going to have a very difficult time in COVID, and certainly the cruise industry was one of those. RCL has really got a very good management, and they've been able to improve their return on invested capital from 10% to 15%. So now they're running better than their cost of capital and better than a lot of their peers. They're on the forefront of having good equipment in their ships and the things that are on the ships and the private excursions that they're able to use. And again, the wealth effect comes into effect there, and also looking for value in other entertainment options. It's still a good value, and consumers are flocking to it. We think demand will outstrip the supply of the cruise ships that are coming on, and so that's another one that has some good underlying fundamentals of the business and the company itself.